The US dollar has long been the cornerstone of global trade and finance, serving as the world's primary reserve currency. However, recent moves by the BRICS nations, Brazil, Russia, India, China, and South Africa, to reduce reliance on the dollar for trade have raised questions about its future stability. Could the US dollar collapse if these countries succeed in moving away from it? Let's explore the potential implications. The rise of de-dollarization. In recent years, BRICS nations have pursued strategies to reduce their dependency on the US dollar. Key efforts include creating alternative payment systems. Countries like Russia and China have developed systems like SPFS and CIPS to bypass the SWIFT network, which is dollar-dominated. Increasing bilateral trade agreements. BRICS nations are increasingly settling trade agreements in their local currencies, such as the Chinese yuan or Indian rupee. Launching a new currency. There has been talk within BRICS of creating a unified currency for trade, which could challenge the dollar's dominance. These moves aim to mitigate the influence of U.S. sanctions, reduce transaction costs, and increase economic sovereignty. How this affects the U.S. dollar. The U.S. dollar derives much of its strength from its role as the global reserve currency. Countries around the world hold vast reserves of dollars to facilitate trade and stabilize their own economies. If major players like BRICS significantly reduce their dollar usage, the following could occur. Reduced demand. As BRICS nations use alternative currencies, the global demand for U.S. dollars would decline, potentially weakening its value. Impact on U.S. borrowing costs. Lower demand for the dollar could make U.S. Treasury bonds less attractive, forcing the U.S. to offer higher yields and increasing its borrowing costs. Trade imbalances. A weaker dollar might make U.S. exports more competitive, but could also increase the cost of imports, contributing to inflation. Why a dollar collapse is unlikely. While the shift away from the dollar is noteworthy, a full-scale collapse is highly unlikely in the near term due to several factors. Entrenched role in global finance. The dollar is deeply embedded in international trade, with around 6% of global reserves held in dollars. This entrenched role cannot be easily replaced. Lack of a strong alternative. While the Chinese yuan and other currencies are gaining traction, they lack the liquidity, stability, and trust that the dollar enjoys. U.S. economic resilience. The U.S. remains one of the largest and most dynamic economies in the world, providing a strong foundation for the dollar's value. Geopolitical challenges for BRICS. The BRICS nations face challenges like economic disparity, political differences, and logistical hurdles in creating a unified currency or robust trade system. The ripple effects of de-dollarization. Even if the dollar doesn't collapse, the ongoing de-dollarization efforts could lead to a more multipolar financial system. This shift might bring regional trade blocs. Regional currencies could gain prominence in localized trade agreements. Greater currency competition, nations might diversify their reserves, leading to a more balanced global currency ecosystem. Economic adjustments. The U.S. may need to adapt to reduced global demand for its currency by addressing trade deficits and fiscal policies. While the BRICS countries are actively working to reduce their reliance on the U.S. dollar, complete collapse of the dollar remains improbable. The dollar's deeply entrenched role in global trade and finance, combined with a lack of a viable alternative, ensures its continued dominance for the foreseeable future. However, the de-dollarization trend is a wake-up call for the U.S. to reassess its economic policies and maintain its leadership in the global financial system. The future of the dollar depends on a combination of geopolitical strategies, economic resilience, and its ability to adapt to a rapidly changing global landscape.